you want to actually own gold and not just shares in a fund, you go to someone like our next guest, Savneet Singh. He's the founder and CEO of Gold Bullion International. He acquires gold through bullion dealers and then stores it in vaults in the United States and Europe. Says his business is up 40% this year. Good morning, Savneet. Welcome to InBusiness.
Thank you for having me.
We're looking at record high prices for gold. Why would I want to own a bar, own the bullion itself?
Sure. So I think there's a huge differentiation between owning a physical bar of gold and actually owning, a share of a trust that belongs to somebody else. And the main reason is there's no counterparty risk. So when you own a bar of gold, the title is in your name, so no one else can claim that asset. So if our firm goes bankrupt or the firm that's storing it for you goes bankrupt, it's still your gold. Along with that comes the fact that you can have it audited, you can visit it, you can store it in different countries around the world. So you add a level of geographic diversification that you can't get from owning a security. And then you can build in things like it's insured for full replacement value. So if something happens to your asset, it's replaced. And I think if you ever compare a real asset to a security that comes off a real asset, you always really want to own the real asset. And so our business is kind of democratizing that and making it available to everybody.
Now, big institutions have done this, big central banks have done this for years, but for the retail, everyday investor, what are the associated costs? Because you're not just buying it, you got to pay to store it and insure it. What's the premium there?
Very much so. So it depends. So traditionally, if you wanted to buy a bar of gold, you were literally calling online websites, gold dealing desks, and it was very hard to get a clear price. And so many times clients are paying as much as 8–10% premiums above the spot price of gold. And with our business, what we do is we actually don't store any gold, or we don't own any gold ourselves. If you came in and said, I want $10,000 of gold or $1 million of gold, we take your order and we bid it out to a market of dealers, and whatever dealer comes back with the best price, we'll execute with that dealer. So you're guaranteeing best price execution. So we've almost synthetically created the utility of exchange by creating a reverse auction mechanism which democratizes it so everybody can order now. So you don't need to have $20 million. You can do it with $10,000, $20,000.
You say business is up 40% this year. I mean, who's doing the buying?
Sure, and it's actually up, twofold in the last few weeks. The buying it's diverse, so it's institutions. So we have hedge funds, family offices, but very much in the retail client base. So we work with wealth management firms where their investors, their financial advisors or investors can type in a ticker and own a bar of gold, and that making it easy is part of making the penetration grow.
What's the average transaction like for you? I mean, how much are people buying here?
Sure, it varies completely. So we have orders as small as for delivery orders of $5,000 up to millions and millions of dollars. So it's investors of all sizes and all types.
Wow, and you store it, you help store it in the United States or in Europe.
Yeah, absolutely.
Where is that demand coming from? Is it a lot of international buying, or is it just here in the U.S.?
What we find is actually within the U.S., most larger U.S. investors want to store abroad. They don't want to store their gold on U.S. soil. So that we have.
Why?
I think it's another layer of diversification. So you own gold, which is diversification, and then you own a real asset, which is another level of diversification. And then when you add on, hey, I can store it in Zurich or I can store it in London, it's just another level of protection that they can't get with a security. And
you see this demand continuing?
I think so. There's a number of levels of demand trends that we think are going to continue. The stock of paper money continues to grow. Never before have so many countries been able to print money, and I think with the growth of emerging markets and the growth of printing, you'll continue to see gold as a safe haven asset because it stores its value. And when you have, if I'm storing my money in a bank and I'm losing 2% of my money every year due to inflation, I'm forced to look for better stores of value, and gold has always proven to be that better store of value.
That's an interesting idea. Savneet, thank you so much for explaining your business. I appreciate it.